Hello traders. The title of the video is Elliott Wave Trader versus S&P 500 Wave Analysis. Alright, so previously we have counted waves. So this is, alright, the first wave right there. Alright, blah, 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 blah. From 1994 up to 2000, we have the first wave, the second wave, alright, forming this zigzag here. All right, this is second wave right there, and then we have okay, the third wave all the way up here. Can you see the third wave right there? That's the third wave. And we were saying, is this the fourth wave? All right, so we have a good reason to ask that question because normally, you see, it came down vertically because I didn't like that. Normally, we prefer it to go down gently, diagonal, up to this point. That was the target, though, 2339, but it just went vertical. So we say, is this our fourth wave? So we wait and see. So the reason why I'm recording this video and I'm titling it, okay, Elliott Wave Trader versus S&P 500 Wave Analysis, which means what's going on, all right? Is our Elliott Wave count, okay, adding up. What is changing now? What do we need to do as an Elliott Wave trader? So it's very important for trader to watch the full length for this tutorial because you will come across this. So everything was clear. You remember, everything was clear. So first wave was clear, second wave was clear, third wave was neat and clean, isn't it? So now we start asking questions now, you see. So as an Elliott Wave trader, you are practicing it, all right? You will come to see it. There will be a time when you will be asking those questions. Is this truly our fourth wave, all right? Where are we now? Where are we headed? What should we do? So at one point, this is the topic today, you will put aside your wave count because you have finished your wave count. There's no more Elliott wave count to do now, isn't it? You've done it, 1, 2, 3, 4. You're expecting the fifth wave. You're asking a question. This is the fourth wave. Your job as an Elliott Wave trader is completed. It's finished. That's it. You ask the question. You make your forecast. All right. The forecast does not mean that you are wrong. It's an expectation. So will the price fulfill expectation? Now, when you are at a junction, this is a junction. You see, now we are at a junction. Anything is possible. Are we going to have an Elliott Wave failure when the fifth wave failed to go above the third wave? All right. So we are at a junction. You will come across that. And sometimes they say, tell me what we're doing. What should we do? Tell me more. Do Elliott Wave analysis for S&P 500. It's already done. It's already done. We are now at a junction. So very often, all right, those who are just obsessed with the Elliott Wave count, they will be talking about blah, blah, blah. Even if it's not very clear, they convince themselves that it's clear. If it's not very clear, what do? You work with the market pattern. All right, that's it. So this is why I'm recording the video now. What is happening now? We are now at a junction. All right, it's not very clear what's going on here and what is likely to happen again. We say, is this the fourth wave? Are we now in the fifth wave? So how do we trade it? The bottom line is that we make accurate decision. And how do we make accurate decision? We adopt the most appropriate strategy, all right? Paying attention to what? Market patterns. Did I say market pattern again? Yes, I did. And here we see, you see those two green lines? The S&P 500, if you are trading it, is just consolidating between that green trend line and this one here. Are you seeing it now? You found a resistance here. Did you see that? Again, you found a resistance on the edge, and that's where you found a resistance again. Now, you see here, you found a support here. There was a tail here, you see. Now, it's here again. So why should I say to traders at this junction, as I'm recording this video today, on the 24th of August, that candlestick bar is not yet closed. What did I say? When we are, you see a monthly candlestick bar like this, okay, it's a bearish, it's Right? What is the dominant force? It's bearish. The bearish traders are controlling this month yesterday. How many days we got left before the month will end? Only 1 week left. All right. So next week, what usually takes place is that either some of those bearish traders will decide to take a bit of profit, or they would like to finish the month bearish because they say, why? We were selling, we were controlling, why don't we finish it bearishly? Talking about making excellent decision, all we can say to traders, the month still got 7 weeks left, 1 week left, all right, which means 7 days, 1 week left, all right. The month was bearish. The bearish traders are dominating the market, all right. If one is buying this month of August, which was bearish the whole month, one should be very, very careful. Did you hear that? If you hear that, that's good. That's very good. So now I will say what I need to say. Priority to bullish signal above that green line because we were consolidating between this green one and this one. We are now at here. Next week, priority to bullish signal above that level. But don't forget, the month was bearish. If you are buying this month of August, be careful. It may stay bearish till the end of August. If you can remember that, then I'm a happy man. I'm a happy man, very happy man. It's a consolidation. All right? But the bearish traders are controlling it up to this point. The month is not yet closed. Be careful. All right? Be careful when you are buying here, even if you see a clean cut buy signal. So our wave count is intact, nothing has changed. We are now at a junction. This is why you will see some time when you are counting wave, you come to a point when you are at a junction. All right, when you have a red light, you stop, isn't it? You stop. When you see orange light, it means that the possibility that a pedestrian may be still on the road. The road, you can proceed, but don't go at a high speed. That's the meaning of orange. Proceed with caution. There may be a vehicle or a pedestrian ahead. That's the meaning of the orange light, isn't it? That's where we are now. We have an amber light or a red light. That's what's going on now. But sometimes Elliott trader will just speed up, okay? You see, I'll speed up. It's orange, I just speed up. So they speed into the junction only to hit another car because they say, I have an orange line. But the same thing when we are counting wave, there are times when you may not see the internal wave, all right? And you may be asking question, which is normal, like here. Is that the fourth way? Instead of just say, yes, definitely this is the fourth way. Are you stupid or what? Can't you see it's the fourth way, George? Are you blind? No, that's not the best approach. A more composed approach will be more prudent. Is this a fourth way? Why is it vertical? Why is fourth way is vertical? It's not the characteristic of fourth way to be vertical. A fourth way should be gentle, like you see this one is a diagonal nicely, like you see this is a fourth manner way of this third way. But look at this one, it's just vertical. So we must put a question mark on it. Now we put a question mark. It is our fifth way. All right. So those questions, we shouldn't just brush them aside just to validate our expectation. It's not because we're expecting a fifth way that we should ignore any warning or price structure or market pattern. But sometimes this is exactly what the Elliott way traders are doing. They see clearly that the warning is on the wall, but they just go and bounce. They just, okay, I'm using they just they push it, all right, and they force it through, and they end up losing, not because they can't trade, but they go ahead of the price. So this is it. So sometimes they say, Joe, record a video about S&P 5, I record a video about the Dow Jones, and I don't respond. Why? Because we are at a junction. There's nothing more to add to it. Everything is said now. That's exactly where we are now. So all I'm doing now is just to tell you that there will be a time when there's nothing to say anymore. We just wait and see. But sometimes people say, why should we wait? You're not sure what we are doing? Well, we know. Well, that's where we are now. We are at a junction. That's exactly where we are now. We are at a junction. The market is at a junction and it's going up and down. See, it's going up and down. All right, until things become clear. This resistance here, we were talking about it before, 2941 for the S&P 500, prior to bullish signal above, and prior to bearish signal below. The long-term equilibrium price level for the Dow Jones is for the I'm talking about the S&P 500 is at a 2861. So it went away from the long-term equilibrium price. Now we are back to it again. There are other trend line. Can you see? Okay, at a key level. This is the hotspot trading zone. Intersection between this key level, this 2816, and that green line. So we are at a hotspot trading zone. But because the month was bearish, this is what I was saying to say, if a month is bullish, all right, very bullish like this, and it's the price near the high and you are selling, be careful. If the price at the low or is part of the candlestick bar and the candlestick bar is not yet closed and you are buying, be careful. That's all. That's all. But sometimes people forget that, especially the monthly candlestick bar. If you are day trading, scalping, you want to check the monthly chart. In that candlestick bar is standard. The dominant fall is bullish. Here, the dominant fall is bearish. See, that's all. That's all. Am I speaking too much today? It's good to talk, my friend. It's good to talk. That's all. So I leave it to you. All right. If so one time you are counting wave, you come to a situation where you are not sure, don't think that it's abnormal, that you are not good. It just means that yes, it's normal at this junction that you pause, that you slow down, that you concentrate on the market pattern. All right. If this video has been truly useful to you, please let us know by giving us a thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, all right, feel free to share it on the social media. Those that are sharing our video, I say to you, thank you very much, all right, for sharing our tutorial. I really appreciate that, all right. Subscribe to our YouTube channel. Our YouTube channel is 24 Elliott Wave, DG2, DG4, Elliott Waves in plural. Be sure to click on the notification bell because according to the Google Analytics, only 10% of our subscribers, all right, did click on the notification bell. So when we post a new video, they don't know whether we post a new video. Another thing that I need to mention to traders that a lot of traders are watching this video, probably on a different platform. Please subscribe to our channel because I noticed that almost 60% of our viewers are not subscribers. It's strange, yeah? 60% of our viewers are not subscribers. Probably those people, some of them, maybe they didn't log into their YouTube account or they are watching it on desktop, but they didn't log in when they are watching a video. So they may be noted as no subscribers. Or I don't know. So that's it. Subscribe and click on the notification bell, please. So this will conclude our discussion today about in your way trader versus S&P 500 with analysis. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS008 traders. Happy ready to you all, and I will speak to you soon. Thank you for watching. Happy trading to you all.